Wakey, 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 wakey. It's time for school. Come on. Wake up. It's time for school. Come on, man.
Hello, welcome back. And if you're new here, welcome to the channel. This video is going to give a basic explanation of what the stock market is and how it works. So if you're looking to learn, let's get right into it. What is the stock market? The stock market is a set of exchanges and other venues where shares of publicly held companies are bought and sold. Companies will sell ownership stakes in the form of stocks to individuals and institutions in order to raise capital and further grow their business. This is beneficial to investors because as the new owners of company stocks, they can buy and sell those stocks in hopes to potentially earn returns on their investments through price appreciation and dividends. If the company does well and makes more money, then investors also do well and make more money. How the stock market works. Listing and initial public offering. When a company decides to raise money, one option it has is to go public by offering shares to the public on the stock market. This is called an IPO. A company will select an investment bank to underwrite the initial public offering, or IPO. The bank will determine the number of shares to be sold and the initial price of those shares, and then a company will list its shares on a stock exchange such as the New York Stock Exchange, NYSE, or the NASDAQ. After a company submits an initial public offering of their stock, investors can then buy and sell shares of that stock on stock exchanges. Buying and selling. Investors, both individual and institutional, as buyers and sellers of stocks and their shares, place orders through brokers or online trading platforms. The stock market operates based on the principles of supply and demand, where prices are determined by the interactions of buyers and sellers. Market orders are orders that are executed at the prevailing market price, while limit orders are orders that allow investors to specify the price at which they are willing to buy or sell. Stock exchanges. Stock exchanges are stock market platforms that facilitate the trading of stocks and provide a regulated marketplace where buyers and sellers can connect and make transactions. Stock exchanges are supposed to ensure transparency, fair trading practices, and compliance with regulations. Examples of major stock exchanges include the NYSE, NASDAQ, London Stock Exchange, and Tokyo Stock Exchange. Market regulation. Regulatory bodies such as the United States Securities and Exchange Commission, or the SEC for short, were created to oversee the market, monitor compliance, and enforce rules and regulations to protect investors and maintain market integrity, as stock markets are supposed to ensure fair and transparent trading. Or so they say. Market orders and trading mechanisms. Stock exchanges utilize different trading mechanisms to match, buy, and sell orders. Besides market orders and limit orders, some other types of orders are stop orders, stop limit orders, and stop loss orders. Market participants. The stock market involves different participants, including individual investors, institutional investors, such as mutual funds, pension funds, and hedge funds, traders, market makers, and brokers. Each participant has their own investment objectives, strategies, and time horizons. Supply and demand. The stock market operates based on the principles of supply and demand. If there is a high demand for a particular stock, its price tends to rise. Conversely, if there is more supply than demand, the price may decline. Various factors, such as company earnings, economic conditions, investor sentiment, and news events, influence supply and demand dynamics of individual stock prices. Risks and volatility. The stock market is subject to risks and volatility. The way in which the public buys and sells stocks and shares has changed over time. Transactions that at one time took place manually now take place digitally. Stock prices can fluctuate based on various factors, including economic conditions, geopolitical events, company performance, and investor sentiment. With digital trading, investors can now buy and sell stocks in an instant rather than manually with processing and wait times. While convenient, digital trading can cause frequent extreme market volatility depending on supply and demand pressure. The risks associated with investing in the stock market involve the potential for capital loss and should not be taken lightly. Frequently asked questions. How do I make money in the stock market? There are two primary ways to make money in the stock market: through price appreciation and dividends. If the stock of a price you own increases, you can sell it at a higher price and make a profit. Additionally, some companies pay dividends, which provide regular income to shareholders. How can I invest in the stock market? To invest in the stock market, you generally need to open an investment account with a brokerage firm. This can be done through traditional brokers or online platforms. Once your account is set up, you can research and select the stocks you want to invest in and place and buy orders through your broker. Risk management and paper trading. What are the risks of investing in the stock market? Investing in the stock market carries various risks. Stock prices can be volatile and subject to market fluctuations. There is a risk of losing some or all of your invested capital. Additionally, individual company performance, economic conditions, and other factors can impact stock prices. It is important to understand the risks and invest accordingly. How can I manage risk in the stock market? Risk management in the stock market involves diversification, setting realistic investment goals, having a long-term perspective, and understanding your risk tolerance. Diversifying your portfolio across different asset classes and sectors can help reduce the impact of any one investment's performance on your overall portfolio. Paper trading. Individuals interested in learning how to trade and use the stock market have the option and are highly encouraged to utilize paper trading first. Paper trading is simulated trading that allows investors to practice buying and selling securities and stocks with fake digital money instead of using your real money. Paper trading is good for practicing and testing investment strategies before implementing it in a live, real brokerage account. Paper trading also allows you the space and time to learn more about the market and how to navigate platforms, make trades, and how to properly utilize the tool available to you to be financially successful. Many online brokers offer client paper trading accounts, as well as there are some stock market trading simulation apps available and dedicated to helping users learn how to navigate the stock market and various trading tools. It should be noted that there is a psychological element associated with trading on the stock market, and paper trading may not represent the true emotions that can and usually do occur during real market conditions. It is worth it to learn more about the real life mental and emotional impact trading on the stock market can have and how to manage emotional regulation in order to be financially successful. So that's the gist of what the stock market is and how it works. However, I must reiterate that it is important for individuals interested in investing to do their due diligence. The stock market involves risk, and it is important to conduct thorough research, seek professional advice if needed, and make informed investment decisions based on your financial goals and risk tolerance before committing to investing your hard-earned money. Paper trading, remember, is a great way to get a feel of what trading securities is like, as well as how to properly navigate trading tools and concepts without actually losing any of your real money. If you liked this video and or learned something new, like, comment, share, and subscribe to let us know that you would like to see more. Also check out our other videos and or let us know what you would like to learn about next. Remember, this is not financial advice, this is financial entertainment. Thanks for watching and have a good morning, a good afternoon, and a great night. Bye.